Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. It is Thursday. It is time for the Three Amigos. It is time for my weekly ab exercise. Hopefully you laugh as well. How you doing, Matt?
I'm doing super awesome. Ready
Awesome.
to do this. Excited
Awesome.
that Dion's almost home.
Dion is on it. He's no longer in Florida, folks. Where is Dion?
Give Waldo a run for his money.
Exactly. How you doing, Dion?
Howdy, I'm doing great. I'm glad my voice is coming back because I'm actually driving to Portland to do a keynote speech. I had an allergic reaction to something I ate, and I haven't been able to talk for like 2 days. So,
sounds good to me.
For today, though.
There you go. Well, hey guys, I don't know if you look at your. Obviously, all three of us have YouTube channels. I don't know if you guys ever looked at your statistics. This morning, I looked at the top videos that people watched besides my channel. So I took the three topics, the top three, and we're going to talk about them and what they mean to us. Does that sound like fun?
Sounds like a blast.
Why not? Right? You got to get ideas from somewhere. So the number one video, rising mortgage rates to destroy the housing market. Interesting. I thought maybe we would talk about what that means to us. Dion, go ahead.
Is that the number one searched or the number one viewed?
I believe viewed. I think it's 684,000 times. Number one.
That would be my thought. It's here's the crash you want that justified you not taking action for the last 10 years. And the reason that you can probably associate it with now.
Yeah. So again, you're absolutely right. Scary headlines, clicks. That said, we aren't going to make this clickbait. We're going to talk about what this means to us. What are we seeing in our markets? Because I do think rising mortgage rates will destroy the housing market. I think it's very different than these other channels are talking about. We have talked about on this channel, always a great day to do great deals, time to fish for motivated sellers. But if we step back and we put on our first time homebuyer hats and we go from a 3% to 6.5%, and we go, up 20% because these other channels were wrong last time, it's fair to say that the average mortgage payment is up 46% from 18 months ago. That hurts. So rising mortgage rates, in case anybody doesn't realize, rising mortgage rates are supposed to dent demand. That is why they do them. So let's talk about what we are seeing, how this might unfold, because for lots of people, specifically real estate agents and real estate brokers, and probably first-time home buyers, the housing market is destroyed here this year. We'll go to you first, Matt.
I'm not really worried. I'm hedging against inflation with crypto. So
stop. There's a lot of people that lost money in that area. Let's not kick them when they're down.
Hey, listen,
we'll kick them down next week.
I'm just saying, I've been getting preached that for a year and a half.
Me too.
And you're wrong. And so at the end of the day, yes, absolutely. Inflation is taking root. It's getting continuously high. I think it will still get worse. I don't think we've capped out by any stretch.
No, I said that today on my morning show. I'm looking at the numbers that made up inflation this time at 8.3, knowing that gas is up significantly, and rent is just coming, and food getting worse. Folks, I got bad news for you. 8.5 is not going to be the peak.
No, I don't think it is. I think we get into double digits, even based on how they count it. I still think we have the chance to hit double digits. Wow. And so to your point, though, to the most important point that you made is it's not impacting demand. It's impacting demand in some areas, but I'm still seeing things hit market. I'm seeing only a gradual increase of inventory.
Yeah.
It's still coming in super overpriced in most cases.
Yeah.
And most of the strategy that I've seen is, you know what? It's market ready. So we're just going to throw it out there at a nutty number. And if we have to take a deduction, we take a deduction. Or if we have to sell under list price, we sell under list price.
Yeah.
I'm still seeing that. And so to your point is, always a drastic rise in rates always leads to, or always in the past has led to a significant slowdown in demand. But because there's so little supply, we're not seeing that. No. We're still seeing the people that want to buy, that need to buy, buying.
Yeah. Dion, what about you? Rising mortgage rates to destroy the housing market. When you hear that, what do you think?
Transactions.
Yeah.
And really from the study that you did, like, actual evidence that this is what happened the last time rates did this. And so there's a group of people who've been saying, when the crash happens, I'll buy then.
Mhm.
So let's say these rising interest rates cause a crash.
Mhm.
And maybe not even prices go down, but they go back to where they were a year ago.
Mhm.
They didn't buy then because the yield wasn't there. The yield won't be there now.
Oh,
Because even
it'll be
last year's
worse.
prices
Yeah.
with this year's rates,
Ugh.
it's even a bigger loss.
Yeah.
So those people are even in a worse position because they don't have the cash flow coming from the deals they could have got last year.
Yeah. So when I hear this phrase, rising mortgage rates to destroy housing, for me, it's like, and what does that mean, right? Like, where's the end of that sentence, right? You guys have all heard me talk about transactions are going to crash. Minimum 25%, possibly 50. Because again, I think Matt's right. If inflation at 8 didn't peak at 8.5 and it goes higher from here, the Fed's going to get nutty. The Fed's is going to Paul Volcker this thing, and it's going to get bad. We're going to go from 6.5 to 8.5, right? I'm not calling that this year. I'm calling that next year, but the Fed's late and all of that. But when I talk about the rising mortgage rates destroying housing, I think there's a couple of things it will absolutely hurt. One, we are definitely going to go into a recession. I think stagflation this year, recession next year.
Mhm.
I think the second home markets are going to take significant haircuts, right? I think a lot of people pre-bought, right? One of the things you realize in when you work in retail or in sales, if you have like a super Saturday sale, which used to be what we did at Sears when I was selling Craftsman tools 30 years ago, or now 40 years ago, 30 years ago. God, 33 years ago. God, I'm old. It would pull demand forward for the month, right? We'd have one blowout Saturday. We would do, 10x a normal Saturday. And then the next 3 weekends would be nothing. So we'd have to do the sale again. What the Fed did for 2 years, it kept rates too low. And we had a pandemic, which said, go somewhere. So we had a lot of people pull forward their second homes.
Yeah.
Rates have doubled. Now we have the federal government saying investors bad, second homes bad because homeowners good. Rates are even higher. So you think it's 6.5 for owner occ, it's like 7.5 for an investor. So I do think the second home market is in trouble. Buying and selling, bad. Number two, first-time home buyers. To Dion's point, prices aren't falling, but rates have doubled. Your ability to qualify has been significantly impacted. I am hearing more and more and more people backing out of deals, not because they want to, but because they have to. Demand is fickle. Unlike supply, which is easy to count, demand is a two-step process. It is A, I want it, and B, you have the capacity to pay. We still have lots of people still want it, but can't buy now. So first-time home buyers. And then two, the biggest boogeyman in the room, which is truly going to destroy housing, is the move-up market is dead. I created a live stream yesterday for Diana Olick because she just responded to the question horribly.
Yes.
The move-up market is destroyed because I am no longer going to sell my first-time home. I'm going to go buy bunk beds and stick my kids together, and instead of move up, which takes 2 transactions. So I do think the housing market is broken. I think transactions, I think mortgage market is going to fall. Refis are going to crater. All of these things I've been calling for. And yet national housing prices in 2022 won't fall. Anybody talking about a 2022 housing crash, nationally speaking, is just wrong. There may be a couple of markets, maybe a highly speculative second market, or some areas that just boomed that will now bust. But there's no housing crash, at least in 2022. What do you think, Matt?
I don't see a line of signs like I did in 08 and 09 or 10.
There's no
Right?
forced sellers, and it's
Nothing.
certainly no cascading forced sellers.
Correct. Now, variable rate mortgages are now significantly increasing.
Yeah, it went from 3
Because-
to 11%.
Yep. So that number's going to create a problem like it always does, but that's 2 years away, 3 years away, 4 years away.
Mhm.
It's 2 on the light side. It's more like 4. So yeah, that's what I continue to see happen. I think, one of the things that I like about the real estate market, and I'm not poking fun, I'm truly stating fact, against crypto, is that crypto is 0.1% of the holders of crypto own 27% of that market, 28% of that market.
Wow. Okay.
It's not like that in real estate. So what we really have in the real estate market is an actual market. It's a market.
Yeah. We don't have, it's very rare. I would argue that the Great Recession was almost like a bank run.
Yeah.
But it was a debt run. The debt blew up. It wasn't
Right.
that the house was bad.
Yep.
It was a debt blow up. What unfortunately crypto had yesterday, and it seems to be continuing today, is a bank run, which is when confidence is destroyed. And they'll never come back again. I got wiped out 80% back in 01, 02, whatever that was, 01, I guess.
Yeah.
And I didn't come back for 15 years. I mean, like, see this scar? I'm not doing that again. I don't care. Right. And when confidence is destroyed, it's not good. And you don't have that in housing, but housing is more expensive.
And I own some crypto. Like,
yeah, I know, me too.
I'm watching it, I mean, again, very, very, very small position, but what's happening right now is exactly what I was worried about, because again, I'm not playing the appreciation game. I'm playing the long-term hold game of real estate that pays me cash flow on a monthly basis to own it and manage it.
Yeah.
Even if you want to make the argument that technically I don't own my home and that the city owns my, okay, fine. I'll acquiesce to that. Sure. Sounds good. At the end of the day, I'm still in charge of the asset, even if my bank owns the paper and the city owns the land. Guess who's making the most money? Me. So I will take that. And in this market, I can tell you, my crypto destroyed in the last 90 days, 120 days, destroyed, down 40, 50%. Thank heavens I'm not in any of the smaller stuff, that's been rug pulled and zeroed out in some cases, or down 90%. Or even, Mike, there's a whole list of stocks there that are down 80 freaking percent.
Yeah.
80%.
Yeah.
And so
I PTSD from looking at my portfolio 20
Mike,
years ago.
You and me both, right? I'm just like looking for the new Cisco in that group.
Yeah, exactly.
And so for me, what's really funny about it is that I rented those 3 units that we showed a ton over the weekend. We looked at probably, I don't know, 40. We looked in depth at 30 or 40 of the applications, and we picked amazing tenants on paper, like never been evicted. I mean, oh my word, they probably are cleaner than I am. And then they rent again, and all the money's paid, everything's deposited, their jobs are safe, over $10,000 a month of monthly income take home. I have zero risk. There's much less risk there. And it's at the average of those 3 apartments was a 23% increase over what they rented for last year. And I didn't do anything but clean them. That's all I did. There were no improvements, no nothing. 23% increase. The deposit's paid in full. The first month's rent is paid in full. Check the box.
Awesome.
It's good to be a landlord.
There you go. Dion?
Well, I know that I argue the nuance. I don't want people to think there's a housing crash coming, because if there actually were reasons for a housing crash to come, if we were 50+% adjustable rate 3 years ago, I'd be telling people, stack cash, be ready.
Yeah.
Be
Me
ready
too.
to pounce, right? I would say delay taking action. I would be on board with that. So that's the nuance that I say there's no crash coming, but there is a crash coming that you need to consider as an investor. Lenders, if they're not laid off already, are going to be getting close to laid off soon. So they're going to get desperate, and they're going to get more creative with how they push things like adjustable rate mortgages. Contractors are going to have less and less work because 2 transactions gone from the move up market, right, just as one little element. So in the past, when you had to fight to find a contractor, they're going to be available. Their rates are going to be, reasonable. And FOMO changed hands. A year ago, buyers, fear of missing out, over asking, wave contingencies, like, oh, I'm going to miss, rates are going to go up here pretty soon. I'm going to miss out on these deals. That's the buyer mentality. The next few months, people who were thinking about selling but didn't last month are going to have that fear of missing out. And as an investor, that's what we need to be looking for now. That person who's convinced they have to sell now and won't find the buyer they're looking for.
Yeah.
So
this is a market that I've been telling my students, and I personally am very excited about, because I I get to do a lot of fishing because, again, right, what has happened? What do I do on my channel, my story? I study the consumer. Why? Because they're my biggest competitor and they're my tenant. That's just a simple reason. And right now, my biggest competitor is retreating. It is less and less likely that could be competing. I won't have 20 offers on something. I will only be investors. And then we will have fear of missing out. We will have more listings available in most markets in the next 30 to 45 days that I am confident about. The question is, how many of those will be what I call wish pricing? And they don't really have any real intention to sell, which is some. Most of the agents I speak with guesstimate, purely guess, purely speculate, 20 to 25%. Okay. Well, that means the other 75% is kind of interested. I want to start fishing there, and I'm going to find the motivated seller. There will be a motivated seller in most markets that goes, I don't believe this, but it doesn't matter what I believe. It matters what they believe. There will be some sellers who have experience from the last crash that think because they're in Fresno and Fresno went down 75% last time, that it's going to happen again, and they will sell out quick and at a discount. Dion, you were offering on a fourplex listed at 1.3. You wrote it at 1.1. I may see a similar example of a fourplex at $1 million. Shoot, I might write it at 720. A lot of them will say no, but here's the deal. I don't need all of them. I need one. That's why I'm fishing.
Just the next one. That's it. Just the next one.
I only need one.
Is just the next one.
I don't need Fresno to collapse 25%. I need one seller to take a haircut, and I never know which one it'll be. I just keep writing offers. Dion, where can people find you, and any closing thoughts?
Well, they're not going to be able to find me if they came looking for me because they never seem to be in the same spot. But you can find me here on YouTube, Dion Talk Financial Freedom.
Awesome. And Matt, any final thoughts on where they can find you?
So I like what Tom Brady says. He's like, what's your next? When always he's asked, because he won 7 Super Bowls, when always he's asked what's your favorite one is, he says the next one. And so that's my favorite deal. My favorite deal is going to be the next one. And you only need one. So don't be belly aching because you think you need the market to do a complete nosedive. You just don't. Do the daily work. You will find the next one. It's just that simple, and you'll get your deal. So YouTube, Lumberjack Landlord, and on Instagram.
Thanks, guys.
Ciao.